Welcome to the Legal Insight podcast by HHQ, where we explore the world of law, business, and tech. I'm your host, Zach, the BD director at HHQ. And in episodes 9 and 10, we're going to have a special fireside chat focused on digital assets, real-world asset tokenization, DeFi, regulations, and the future landscape of crypto. Now, for this special episode of 9 and 10, we have a special guest. His name is Derrick Leong, the head of legal and compliance for Iswap. Welcome, Derrick. And we have two distinguished guests as well, Johnson, our head of technology practice group, and Khai Yi, our co-head of technology practice group. Welcome, guys.
Good to see you again.
Thanks for the introduction.
Now, before we dive in deeper, let's set the stage. Derrick, would you care to give us an introduction or a brief introduction about yourself and also where you come from?
Sure. Thanks, guys, for having me on this podcast, and hope to be able to give some good little nuggets of wisdom to all your listeners out there. So a bit of a background about myself. I started off as a lawyer like you guys in practice. I was at a law firm for about 6 years, and during the latter years of practice, I was focused on Fintech work, so financial and technology related matters. And I suppose why I was given the opportunity to sort of lead this portfolio in my department at the point of time is because, well, you know, as lawyers, it's a very demanding occupation, right? I'm sure I don't have to tell you both. You spend lots of hours, weekends, public holidays. I was that crazy guy who, whatever little extra time I had, I sacrificed those times basically to look at charts, conduct some fundamental analysis, do my own research into stocks at that point of time. And then just a few years ago, I started moving on to crypto. Around that same point of time, I think we were getting crypto-related work at the firm as well. So advising regulators, advising exchanges as well. So both sides of the spectrum there. And then we were dealing with some crypto fraud, asset tracing exercises, things like that. About the time when COVID hit, when I joined Iswap, where I currently am.
So what does Iswap actually do, and what is your role in Iswap?
Yeah, so I actually head legal and compliance at Iswap. We also have a sister platform called InvestorX. Both are under the same group of companies, so I'm also quite involved in the InvestorX legal side of things. But coming back to Iswap, we operate the world's first decentralized exchange for RWA or real-world asset tokens. So Iswap is licensed in the Bahamas. What we like to say is we provide the full suite of tokenization services. So this includes things like advisory, consulting, structuring, documentation. As I mentioned, we have the licenses as well. So we have an investment platform where we have lots of KYC users on there. We have also a secondary trading solution in the form of a decentralized exchange. And on top of that, we just provide marketing support for all our deals as well. So that's that platform Iswap caters more towards retail investors, whereas InvestorX is licensed in Singapore and caters more towards accredited and institutional investors.
That's very interesting. So before we dive in too deep into the world of tokenization, let's take it 2 steps back. I suppose most listeners are like myself in the world of cryptocurrency. Perhaps we were not as crazy as you doing late nights about charts and everything. I just saw the trend. I signed up for an account. I started investing small money into a crypto platform, but that's about it. So for the majority of the listeners out there, could you just provide a really brief explanation as to what cryptocurrency is for our listeners who might be new to this topic or who might be fresh and just wanting to know more about it?
Yeah, of course. I think everybody starts off like that.
Yeah.
Well, okay, what are cryptocurrencies? Okay, actually, I'll start off by saying I prefer the term crypto assets, just because I think cryptocurrency as a term is a bit of a misnomer. And the reason I say this is because there is no uniformity in the way these sorts of assets are classified across different countries and different jurisdictions, right? So under your broad category of crypto assets, you can have different sub-assets. Like you can have utility tokens, you can have exchange tokens, NFTs, stable coins, real asset tokens, security tokens, and whatnot. But if I were to define crypto asset in the sentence, I would say they are digital assets or representations of value secured on the blockchain through cryptography.
Thank you very much. Yep. That's a great explanation, actually. Now let's turn our attention to both of you guys. I mean, you've done this podcast for like 7, 8 episodes now. And we have not properly introduced you. You know, we know that you're the head of technology practice group, but maybe you can share a bit of your background. We'll start with Johnson. Was there a defining moment or a piece of innovation that sparked your interest in cryptocurrency or crypto assets?
Yeah, thanks, Zach, for the questions. So for me, I think it's very similar to what explained by Derrick as well. So for me, I'm a lawyer, and actually my interest, I wouldn't use the word interest. I think that the right term would be exposure. So I just started as a regulatory and compliance lawyer. So I was focusing a lot on fintech work as well. So e-money license, remittance, payment gateway, or payment system. And then there was roughly in 2016. And one day, there's a client was knocking on the doors of our firm. And then he was saying that he wanted to actually establish a digital asset platform. So basically, he wanted to actually allow trading of digital assets. Back then, it's not even called digital asset. They're just calling it crypto. Then back then, I was like, what is this digital asset? And I was actually being tasked to actually look into the policy, look at the regulation and law. And as they say, the rest is history.
Now, 8 years later, are you still as invested into this world?
Well, the saying is you only buy and then you just keep buying more, keep stacking more.
Hold on to dear life.
Correct. Hold on to it.
Yeah.
Correct. Yeah.
Yeah. Thanks, Jonathan. So now, Khai, what was your first experience with cryptocurrency and how did it actually shape your perspective on this industry itself?
It's definitely meme coin.
I wanted to say
Shiba.
that, but no. And I won't even confine it to cryptocurrency because I think the first time I got in touch with digital asset in a sense was NFT. I was just reading about NFT when an NFT boom just started, right? And I was talking to a client of mine at their office, one of the largest snack food manufacturers in Malaysia. And the management were just saying, hey, we actually want to tokenize or rather create a series of NFT using our mascot. Are you able to advise us on that? So that sort of one thing led to another. And then later on, I had the opportunity and the privilege to be involved in the Binance investment in one of our local DEXs. And it's only after those professional involvement of mine that I started looking at, okay, how do I actually invest in this asset class in a sense? And I started buying a little bit of Bitcoin, a little bit of Ethereum. Then I looked into DeFi as well. Then I started buying ICO. I started getting into DeFi. I started buying NFTs as well. Some apes, right? Some apes.
Yeah.
Not the bot ape, right? Yeah. So that's how I started.
So this is why he's looking to retire soon.
No.
I see. So this is just your hobby, right?
Let's just say that whatever that I touched on, because I don't have a Midas touch, right?
Yeah.
Whatever that I touch just collapse.
So let us know what you're buying next.
Yeah, I will.
So
So
that
that
we
you don't get
avoid
into.
it. That's interesting. So now that we have a brief kind of like background of the three of you, let's zoom out and take a look at the broader crypto landscape. We'll start with you, Johnson, from your perspective. What are the significant milestones that you've seen that have actually defined the industry in the recent few years?
As I mentioned, my first exposure towards digital asset or cryptocurrency started in 2016. So I really think that there are three significant changes or landscape that has significantly transformed how we are looking at blockchain or digital asset or even just cryptocurrency. The first one is definitely what I think that the term being used is DeFi. So decentralized finance. So when DeFi was first being introduced, it is really something that is set to transform the traditional finance because without a central authority, one is able to do lending, do trading, do borrowing, or even for yield farming purposes. So number one is definitely DeFi. Number two is like what mentioned by Khai Yi, is NFT. So when NFT was first being introduced, one is able to actually hold NFT non-fungible tokens, and then just by holding tokens, you represent the digital ownership. That is really set to change how we actually look at any digital asset from the digital ownership side. And then IP perspective will come into picture. And then with the combination and also the maturity of both DeFi and also NFT. So right now, I think that we are really entering the new stage of RWA tokenization, which is real asset tokenization. Because real asset tokenization is something, I would say that it's a convergence of both NFT and also DeFi. And right now, not only companies, but I'll be saying FI, financial institution, and also foreign funds like Blackstone, BlackRock, they are the one pushing the tokenization of real assets. So if you ask me, there are really three milestones. The first one is when DeFi introduced, after that NFT, and then right now it's really the combination of both This is why I would say that most law firms, most company, or just most fund managers, everyone is talking about RWA tokenization.
What do you see as the biggest challenges currently facing the crypto industry?
I think when it comes to challenges, of course, we are talking about Malaysia, right? What Johnson and I have seen is confusion as to whether the industry as a whole is regularized or not, whether there is regulation. Yes, we do have some regulations when it comes to digital asset, right? But it's not the full spectrum of digital asset. I think the regulations in Malaysia, we're only regulating DEXs, we're only regulating initial exchange offerings, we're only regulating digital asset custody, right? But not the other kind of offering. If you talk about, if you zoom in a little bit more, what about stablecoin? What about utility token? To some extent, they would fall under some of the regulations, but not every single features of a utility token, for example, or a stablecoin, right? An entire blockchain project may involve several different kind of features or elements. Some of them may involve payment, right? So things like that will muddle the water a little bit. So clients, every time when they come to us, they will ask us, how do we go about it? It seems like your existing regulations in Malaysia doesn't cover every single aspect of what we do. These part of what we do fall under some other regulations, maybe governed by BNM, for example. How do we go about it? Do we then speak to BNM? But would BNM even want to speak to us?
Yep.
So that's all things. I think that's the biggest challenge that the industry is facing. And that's what Johnson and I are trying to solve for the industry.
So now my question to you, Derrick, maybe you can provide some context as to how the regulatory environment is currently evolving. And you mentioned that Iswap is actually based in licensed in the Bahamas,
Yes,
and
that's
based
right.
in Singapore. So maybe you can, from a Singapore and the Bahamas perspective, how has the regulatory environment actually evolved, and how is it affecting the adoption of digital assets from your point of view?
Yeah, what Johnson and Khai Yi has said, I fully agree that regulations have been playing catch up, and they will always be playing catch up, simply because new digital innovations are being created every single day or several times a day, right? You have new asset classes, new activities being created constantly. So, there's always going to be that sort of regulatory gap. But I would say that in both Singapore and the Bahamas, they have sort of been at the forefront of these regulations, right? In Singapore, we have the MES, the Monetary Authority of Singapore, which acts as the regulator for this space. They are known globally as one of the most reputable and I suppose respected regulators out there, and rightly so. I mean, we've interacted with them quite a lot, especially through engagements with industry players, audits, and regulatory compliance. Because we have licenses there, we can definitely see this. They are very switched on. They are very proactive and intelligent. They're always looking to gather feedback from those in the market, right? For example, we were involved in what was known as Project EVCC, which was basically a pilot project to explore the possibility of tokenizing the Singapore Variable Capital Company. And under Singapore law, you have the two main acts, which is the Payment Services Act, or the PSA, and the Securities and Futures Act. The PSA governs, what you know as your usual, your typical cryptos out there, right? Like Bitcoin and Ethereum. They're governed as digital payment tokens, or DPTs. And then stable coins are also regulated under the PSA. For security tokens, or RWA tokens, they're governed under the Securities and Futures Act. On the Bahamas side of things, they were one of the first few regulators to come up with digital asset-specific laws. So this was in the form of the Derricks, which is where we got our license from. Unfortunately, the first licensee there was FTX. We all know what happened there, the fallout. Things weren't so good after that. But just a couple of months ago, they've actually implemented revisions to the Derricks. So they're trying to sort of, I suppose, plug the holes, to sort of shore up things over that side. And what they've done this time is also introduce more crypto activity specific regulations. So things like staking now is governed. Well, you don't have that in a lot of countries, right?
Yeah.
So that's actually good for us because we're about to roll out a whole new huge staking campaign. This is instances of how we are sort of taking advantage of the regulations that have been put forth in these jurisdictions.
Do you think that, regulation in Singapore and the Bahamas being a bit more proactive and, like you said, always switched on, always talking to industry players, do you think it has positively affected adoption of digital assets, or has it had the inverse effect where regulation have kind of stifled growth?
I think there are two sides of the coin here, right?
Yeah.
For those crypto natives, there are lots of them who are steadfast in their belief of decentralization, freedom from regulations, right?
That's right.
Whereas I am certainly an advocate for what we call permissioned DeFi, which means introducing regulations to basically safeguard investors, users from fraud, market manipulation, rug pulls, things like that, right? Scams, which are very prevalent in the industry. But at the same time, I sincerely believe that regulations should adopt a technological neutral approach. So a tech neutral approach, basically, right? Which means that they should come and introduce these protections, but they should not stifle the innovation in itself. That's my belief.
Thanks, Derrick. Now, for today, our main focus would be on the topic of tokenization. So, Johnson, you've briefly talked about NFTs and RWA tokenization earlier. Perhaps just to set the scene, could you explain why tokenization has become such a buzzword of late in the finance and legal sectors?
I think the reason is really because the moment they realize the potential of tokenizations, I think one of the key benefit of tokenization is that you are able to tokenize any asset, whether it's tangible assets, intangible assets, any form of assets. The moment you're able to name it, chances are you can tokenize that. And that ability to tokenize any assets is really going to change how we think finance, how we think of investment, or how are we going to purchase anything. So let's just use one example. For example, if I actually want to purchase an investment product, and if I'm going to purchase an investment product that is based in overseas, it's going to be a bit difficult for me to purchase that because I may need to open the bank account with the country, and then there may be some jurisdictional issue. I may not have access to the banking system over there. But due to the evolution of DeFi, and also in the event I have access to the protocol, I have access to the platform just by holding the token itself. As long as they tokenize that particular investment product, for me, just by holding the token itself, I will yield the benefit of the tokens. So with that, you are able to see that I'm able to overcome a lot of issues without opening a bank account at another country, without having an address at a country. So the moment companies they realize that, look, actually token and blockchain and crypto is borderless. They are actually looking at ways for them to actually yield and to maximize this advantage. So with that, many companies, they are looking at their own personal assets, thinking, look, I have this asset, and then I would really want to sell this asset. How am I supposed to market that? How am I supposed to sell that? And then how can I reach out more than just local market? Because there will be situations where a company, they will want to tokenize their corporate bonds. And then instead of just selling to the local market, they may be thinking that how can I have a better reach to a foreign investor as well? So with tokenization, of course, regulation is always one of the important key for them to overcome. But the idea is there. The idea is there for them to explore.
Thanks. That's really encouraging news, actually. So now, switching the lens here to another asset class, real estate. Khai, real estate tokenization. It's pretty interesting because rather than other kinds of asset class, real estate is very physical. It's about, landlord, it's about tenants, it's about renting it out. You want to see the building, you want to see how it looks inside, whether the pipes are leaking. But when you tokenize an asset, things get a little bit interesting. What are the key benefits and challenges that you foresee in tokenizing real estate, and do you see it evolving here in Malaysia?
So I'm going to bring a rather unconventional point here. I'm trying to mix tokenizations and NFT together, but because the way I see it is essentially tokenizations, it's pretty much, I can do it in a fungible way or a non-fungible way, right? So assuming that I tokenize real estate, one of the things that I thought of is I can sort of, quote unquote, digitize my entire land office system. Right, we all know how archaic our country's land office system is. Right, we are still relying on physical land title, and assuming that everything can be digitized, everything can be stored on blockchain, that would really speed up the transaction speed, right? And also ease up a lot of things, right? Procedurally and administratively. So that, to me, tokenizations of real estate assets or the whole real estate industry, right? Traceability and also transparency and increased speed are probably a few of the biggest benefits here. So of course, if you tokenize real estate assets, you can also open up possibility of fractional ownership, which is something that we're going to talk a little bit more later. Essentially, you're opening up avenues for the masses, public, who may not be able to invest in a more prestigious property, for example, right? To be able to jointly invest and co-own, not just 2 or 3%, but rather in the hundreds or in the thousands, right? To jointly own a particular property. So I think these are the benefits that real estate tokenizations is bringing to the table. So of course, challenges would be if we are really serious about tokenizing the entire land office system, I think it will probably take years to digitize every single records that we have.
That's why we need Iswap to assist us with this
project.
If you guys are up for the challenge.
Yeah, ready and willing.
I remember when I was a pupil, I was dealing with a case where we had a land title that was from when Malaysia was born, and the title itself was like it's broken in pieces, and
Exactly.
the ink is already rubbed off, and we had to figure out who is the owner, where is it located. It was just a pain. So innovation is welcomed. So being at the forefront of innovation, Derrick, are there any innovative piece of tokenization projects that have recently caught your eye, and what makes them stand out to you?
I mean, the one that's been making waves now is BlackRock's Biddle Fund, right? We are seeing a lot more institutional adoption in this space, which is why it's gaining so much traction, I suppose, over the last year or two. So you have also JP Morgan with their Onyx private blockchain. You have Franklin Templeton, their tokenized money market fund. As Johnson said, the types of assets you can tokenize is only limited by your imagination. And that's what we believe as well. So our sort of quote unquote slogan is we are asset agnostic. Means we can literally help any asset owner tokenize any asset, unlock the liquidity from that asset, fundraise using that asset. So yes, sure, we've done more vanilla stuff like private market shares, debt instruments, but what we've done, which is more interesting, well, personally, I think they're more interesting, is we've also done tokenized wine collections. We've done YouTube channels. We are tokenizing international film backed by some of the biggest names in Bollywood as well.
Wow.
So these are, there's so many different types of asset classes out there, right? That you can tokenize. And like Khai Yi said, I totally agree with what he said about real estate because it's ripe for tokenization. And I'm just going to piggyback on what he said because traditionally, lots of these real estate or property projects are only reserved for the ultra high net worth, right? Or the large MNCs, right? We're talking about, for example, multi-million, $100 million project, right? Who can buy that? Very few people, right? But imagine now with tokenization, you can fractionalize that into 100 million tokens. Each token goes for $1. You can invest in it. And you basically gain exposure into the upside or the rental yield and other revenue generated from that property itself. So it's all about this idea of democratizing access to investors, right? Bringing all these illiquid, expensive, unreachable assets now to the masses.
Yeah, sorry. I'm just very curious. How do you tokenize wine?
So it's set up. So that's why you need good lawyers, I suppose, like yourself, right? To structure it in such a way where, we always work with different clients, right? Coming up with and devising different structures depending on their assets, depending on where they are based, the laws of their jurisdiction, right? And coming up with a legally compliant framework that also suits the investment deal terms itself. So, for example, for tokenized wine collection, you can have it stored by an entity itself, and then you tokenize the entity such that investors who own tokens get exposure into the underlying asset.
Good
Cool.
idea.
Yeah. One word that you mentioned caught my attention, which is you help find liquidity So you tokenize an asset, you help find liquidity. I'm just wondering, what is your role in finding liquidity, or do you help to create a demand for it? What is Iswap's role here?
Yeah, so that's a very good question. So what we are seeing in the real world asset tokenized market now is lack of liquidity, right? So insufficient market makers and whatnot. So that's why we came in. We built the world's first decentralized exchange for RWA tokens, which basically operates based on what is known as liquidity pools. I'll get into that a little bit further, but essentially these solutions allow traders and users to trade tokens, right, 24/7 without needing intermediaries, without needing anybody to be present at the other side of the platform at any given time to execute a trade.
Wow.
Yeah, but we'll unpack that later.
Wow. Okay, we'll come back to that. So now moving further into the topic, right? Khai Yi, maybe you can break down the concept of fractional ownership a little bit more in the context of RWA tokenization, and why is it a game changer?
Traditionally, assuming that this table can only be bought by one person, right? It's not meant to be shared. It's not meant to be co-owned. But now, because of fractionalization, or rather fractional ownership, we can actually break down the ownership of this particular table into multiple pieces, or rather bite size. So let's just switch the underlying asset from table to a property. Essentially, that's what it means. This fractional ownership, not fractional ownership, but rather IP, we have a very similar concept of joint ownership, right? So essentially, a particular trademark or particular copyright patent, for example, can be co-owned by several people. But of course, the difference between a joint ownership in IP sense and also in fractional ownership in crypto sense, digital asset sense, is that when it comes to IP, everybody actually gets the full share of whatever that's to be generated by the IP. But when it comes to digital asset, you're only getting the fraction of how much you own.
Yeah, which is the beauty as well.
Yeah.
For example, right now, assuming I'm going to tokenize a real estate, and then everyone, because of something called DAO, so basically everyone, I'm able to vote to determine what am I supposed to do with that based on the shares that I have. And then everyone will have a say. And then in order for you to really determine the future or the further action towards that particular asset, it all based on your voting right.
So now I'm going to ask, I'm not sure if it's going to be a dumb question, but I'm just going to ask.
There's no dumb questions.
All right. So now we've talked about kind of the beautiful part of fractional ownership and tokenization. Let's say the asset class is real estate. Operationally, it sounds like something needs to be done, because traditionally, a landlord will own a property, the rental yield goes directly to him every month. The tenant just banks in the money. All right. So let's say now there's no one landlord, like everyone is a fractional landlord. How does that work? Like, are there like ancillary services that provides, tokenized property management or tokenized JMB, like how does that work?
So
do you know of any use cases?
It's actually very normal. In fact, I think it's happening in Malaysia. So like most of property developers, what they do is they are only good at one thing, which is to develop property. But management is another ballgame. Is for you to deal with tenants, for you to deal with authority, local authority and whatnot. This is another ballgame in which developers, they do not want to do. So what they will do is they will tokenize it, and then they themselves will be selling the tokens, and then the owners themselves, they can vote to determine which management office they want to hire. So for them, they can say that in the market, there are a number of great property management office or property management company. They can vote, and then they can determine which particular company they want to engage. And then everything is fully transparent, because we are able to actually, from the blockchain or from the DeFi platform itself, we are able to tell that how many votes. And then with that, they can decide which company for them to engage. So the landlord or the token owner, all they need to do is to vote to decide which particular property management company for them to engage. And the property management company will be doing what they are engaged to do, which is to collect rent, to clean up the property, and also to deal with local authority.
Actually, I would like to ask Derrick, let's say it's not a real estate, it's not property, but rather other kind of tokenized or maybe fractionalized asset, right? do you in your experience, do you actually get an outsourced party to manage, or how does it work? You mentioned tokenizing YouTube channels just now. Actually, I don't know how can that work.
So it's a very good question itself. I would say that the super majority of investors or token holders, why are they buying a token, right? Why do they want fractional ownership of an asset? I would say typically the main reason is because they want to invest. These are like, say, on Iswap, we deal mostly with retail investors, right? So for example, if I invest, I'm not an expert property manager. I wouldn't want to manage property myself. So hence, you hire a property manager makes absolute sense. Similarly with a wine collection, right? I don't have the proper conditions in my house to store wine, right? Yep. So and these are super expensive. We're talking about tens of thousands of dollars per bottle, right? I'm not going to waste it away, right? So I would want a professional to store it for me with the proper equipment, right? So it's things like that. With YouTube channels, now the way we've done it is such that now these are K content YouTube channels, right? Basically, Korean YouTube channel owners have basically been acquired, and the ownership over the revenue rights to these different YouTube channels have been fractionalized. Right. Okay. So it's a basket of assets that any investor can now gain exposure into. So obviously, you let the YouTube channels run it because you are acquiring them. The value of proposition of the YouTube channels is because of the content creators itself. Yeah. As a token holder, you don't want to take control of that, right? All you want to do is gain exposure to the underlying revenue and profits generated from the YouTube channel.
Interesting. Yeah, that's interesting. And you mentioned that fractional owners actually have voting rights as well.
Yeah.
So my question would then be, to Khai, what are the key risks that investors should be aware of when engaging with these fractionalized tokens? Because it sounds like a nightmare enough when you have 2 or 3 owners. Now you have potentially millions of fractional owners. What are the risks involved for investors? Yeah.
The way we see it is, of course, as investor, you need to know what are the rights accorded to you by investing in that particular product, right? What are the sets of rights and benefits and entitlements that you are getting by investing and acquiring all these tokens? And how do you exercise those rights? When can you vote? How does the voting mechanism work? And how will the valuation of the underlying assets be done? Because I'm assuming that if it's a property, value will appreciate or it will depreciate, right? That means valuations need to take place probably on a periodic basis to take into considerations of people who want to cash out. And I think that will affect the value of the token itself as well. So then, so when would it be done? When would the valuation be done? Things like that, which I think investors would really want to pay attention to, because that affects how much they're taking away, right, in terms of their investment.
Different tokens have different rights, exactly as what Khai Yi said. I think in determination of what a token holder would actually get when he buys a token is very much a determination made by the asset owner itself a lot of the time, right? There's a lot of considerations to play, like how much of the management powers the issuer or asset owner wants to delegate to token holders. And number 2, also whether whether they think that it will make the deal more attractive to actually give these rights to investors. There may very well be cases where because of the cumbersome nature in which dealing with or gathering votes from 1,000 different token holders will entail that they don't get voting rights.
True.
But you can also do it. I mean, you can give them equity voting rights if you want. For example, through a DAO, as Johnson mentioned. Although that's a whole different Pandora. There's a whole different Pandora box that we'll probably not get into right now. But essentially, coming back to the point, I think that the basic principle is there's a variety of different ways you can structure up your token, which is why I think it's very important to understand the needs of your client, right, your issuer. and structure the deal accordingly, and that's where basically token holders will get their rights from.
Yeah, just to add on like what Khai was and then Derrick was mentioning, because right now when we're talking about the risk, I think one of the key risks is really about the legal ownership. So for example, let's talk about property. So assuming I'm going to tokenize entire building, so everyone's assuming there are 1,000 token holder. So right now, in the event where the entire property being auctioned off, so how is the money being distributed? So of course, so the one that we're distributing, the insolvency department and whatnot, they are going to distribute actually based on the land title. So this is why, as mentioned by Derrick, how are you going to structure that? The agreement itself, it must be extremely clear. Otherwise, just by holding the token without the proper structure, without the proper agreement in place, in the event where the property is being auctioned off, I like it or not, they are just going to distribute based on the title. Just by the title. Correct, just by the land title. This is why you would need proper lawyers for the advice. Otherwise, by holding token, unfortunately, when things happen, when there's a foreclosure, you will not be getting anything in return, even though you are holding the token.
Right. So now, Derrick, as we near the end of our discussion in this episode, let's look to the future. What are your thoughts about the long-term impact of tokenization, especially in terms of regulatory developments and also market dynamics? And how do you see the trends shaping the market over the next decade or so?
Yeah, I think tokenization actually presents very interesting opportunities for regulators to respond to. They have to adapt their current frameworks to these new activities and asset classes, or they have to come up with new sort of regulations, right, to sort of govern this entire space. And the beauty about blockchain technology is, especially public blockchains, right, is everything's supposed to be transparent, immutable, which means it's tamper-proof, right, and it's supposed to contain an entirely accurate record of transactions. So I think that in terms of regulators, why this would actually help them in terms of monitoring transactions for AML or KYC purposes is revolutionary. Unlike your traditional systems, right, fiat systems or banking systems, where with cash, it's a lot of things can be hidden in sight, right? That's why drug dealers and human traffickers like to use it. With banks, a lot of it's opaque in many countries as well. You can't see, your everyday person can't actually see what's happening.
True.
But contrast that against the blockchain, right, where everything is transparent. So, I mean, for listeners out there, I just want to sort of correct this misconception that has been sort of thrown around by a lot of the mainstream media and certain uninformed persons out there. Blockchain is actually better for regulatory oversight compared to traditional systems. Coming on to the second part of the questions about trends, I think that blockchain technology, tokenization, fractionalization, this is simply the next obvious step for the technological revolution of mankind, because it brings so much efficiencies. I mean, we've talked about it, because time cost saving, right? With eliminating so many intermediaries, you can do things so much faster. You can put deals up, in a much shorter, in a fraction of the time. You can have, you can basically bring new asset classes and activities to anywhere. To anyone, anywhere in the world, right? All they need is a device, a phone, a tablet, a laptop, right? They can access these things. And 24/7 trading and liquidity is something I mentioned also. It overcomes a lot of the problems that are plaguing traditional assets like illiquidity discounts. Coming back to the $100 million real estate example I gave you, how many people can afford that? And because sometimes these sellers need to get rid of it quickly, they need to accept a haircut on it, right? Because of illiquidity. And I think the last point I want to make about fractionalizing these traditionally illiquid or expensive large assets is that with tokenization, this can be done for even smaller raises, right? Your traditional IPOs are so expensive, it doesn't make sense, right, to go through with them. But with tokenization, it's so much cheaper that you can do it this way. And, also for certain types of assets that you can't tokenize traditionally, right? For example, I talk about YouTube channels or even wine collections. And now you can do this through tokenization. So those are my 2 cents.
Thanks. Gentlemen, just a last question on tech law. So how do you see this evolving in the realm of law and the legal practice, right? Do you see a lot more transactions happening here in perhaps corporate M&A space, the litigation space? Do you see a lot more activity here happening in the next decade or so?
I think the answer is definitely yes. In fact, yesterday we all just, both Khai and I, we all just came back from B&M office. One point that actually been mentioned by Derrick, due to the nature of blockchain, every single transaction is fully transparent. And then we are talking to B&M, and then B&M, they really like the idea because as mentioned by Derrick, actually the flow of funds is always messy, and then you are not able to trace it. That's why there's always corruption. That's why there's always money laundering, online gambling, scams, and activities. But the thing is, everything recorded on blockchains, you are able to fully audit. And then there's a feature called blockchain tracing, in which you're able to actually trace the flow of funds, the flow of assets. So a lot of companies and then even regulators, they really like this idea. And then for our regulators, they are actually supporting this. So if you are asking us to make educated guess what is going to happen next, we really believe that a lot of M&A transactions or even different kind of acquisitions, acquiring this kind of technology is really happening at an extremely fast speed.
Yeah, and I think we spoke about regulations a lot. So chances are some form of regulations will come into place, right? And I think regulation is what's required before institutional investors will really be very, very comfortable and take confidence in investing in this new technology in a sense, right? Of fractional ownership, or maybe opening up their funds, for example, for tokenizations. So when that day come, I think it will create a lot of demand for legal work. There'll be more activity, there'll be more acquisitions, like what Johnson has shared just now.
Thanks for sharing your insights and expertise. That's all the time we have for today's episode. And this has been an enlightening discussion. In the next episode, do join us where we will dive in deeper into the world of DeFi, the regulatory landscape, and the future trends in the crypto assets space. Now, if you've enjoyed this episode and you found it helpful, don't forget to like, share, and subscribe to the channel. And if you have any questions at all, do drop us a comment down below. Now, this has been the Legal Insight Podcast by HHQ, where we help you explore the world of law, business, and tech. See you next episode.